This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC+, which on Tuesday rubber-stamped an earlier decision to go ahead with production increases over the next 2 months, now sees the oil market tightening further than previously anticipated. Under their existing plan, the Organization of the Petroleum Exporting Countries and Allies led by Russia, known as OPEC+, will add 700,000 barrels per day, BPD, in June and 840,000 barrels of oil per day in July. The oil market, which was largely expecting this outcome, reacted positively, with Brent crude prices closing above $70 a barrel, their highest since March.
Mexico's leftist ruling party has dropped plans to nationalize lithium production and is now pushing to welcome private investors to help develop the country's potential in the metal used to make batteries, the senior lawmaker behind the proposal told Reuters. Mexico, a major copper and silver producer, is home to large potential reserves of lithium, used in electric vehicle (EV) batteries. Most of it is in hard-to-tap clay deposits that are costly and technically difficult to mine. After touting the possibility of a state-run lithium monopoly late last year, Senator Alejandro Armenta, chairman of the Upper Chamber's Finance Committee and a key ally of President Andrés Manuel López Obrador, said he will instead author a bill to promote a regulated marketplace in the nascent sector.
Moving on to the top news in the energy sector.
Investment in energy is on track to recover by nearly 10% in 2021 as the world emerges from the COVID-19 pandemic, the International Energy Agency, IEA, said on Wednesday, but spending will fall far short of meeting urgent climate goals. More of the $1.9 trillion in investment is projected to shift toward electricity than ever, with more than $820 billion due to earmarked for power, the sixth year in a row it will outstrip investment in traditional oil and gas. The rebound in energy investment is a welcome sign, and I'm encouraged to see more of it flowing towards renewables, Fatih Birol, chief of the Paris-based watchdog, said in an introduction to the annual World Energy Investment Report.
The German government plans to speed up the expansion of wind and solar energy by 2030 as part of its climate protection program, a draft law seen by Reuters showed on Wednesday. The new plan aims to expand installed production capacity of onshore wind energy to 95 gigawatts by 2030 from a previous target of 71 gigawatts, and of solar energy to 150 gigawatts from 100 gigawatts, the draft showed. Germany's installed capacity of onshore wind power stood at 54.4 gigawatts and of solar energy at 52 gigawatts in 2020. The climate protection program also envisages funding of around €7.8 billion, $9.5 billion, for next year, including €2.5 billion for building refurbishment and an extra €1.8 billion for subsidies for electric car purchases. Next, we have the top news in metal markets. Trafigura, Gunvor Group and Bluecrest Capital Management have hired traders as they seek to profit from an infrastructure boom spurred by the global energy transition, 6 sources with direct knowledge of the matter said. Robust manufacturing activity, as the world emerges from pandemic lockdowns and as government stimulus drives spending, has boosted metals demand, and expectations of tight supplies have pushed copper and aluminium prices to multi-year highs. The shift to a low-carbon world, involving electric vehicles, renewables and energy storage, over the coming years is expected to further increase demand and prices, creating money-making opportunities for trade.
Russia will decide about whether to impose additional taxes on steel producers this year, TASS news agency reported on Wednesday, citing First Deputy Prime Minister Andrei Belousov. Russian metals producers may face a demand to pay 100 billion rubles, $1.4 billion, in additional tax to the government. The changes are being considered only for producers of ferrous metals, Belousov was quoted as saying, adding that producers of base metals were expected to remain unaffected. We need to find decision this year, Belousov said, adding that there is no task to take money away from metals producers.
We will now look at the top news in the agricultural sector.
The U.S. Department of Agriculture on Tuesday rated 76% of the U.S. corn crop as good to excellent in its first condition ratings for the 2021 crop, above the average estimate of 70% in a Reuters analyst poll. Pre-report trade estimates from 12 analysts surveyed by Reuters ranged from 64% to 78% good to excellent. A year ago, 74% of the corn crop was ranked good to excellent. In a crop progress report released a day later than normal due to Monday's federal holiday, the USDA said U.S. farmers had planted 95% of their intended corn acres by Sunday, up from 90% a week earlier and ahead of the 5-year average of 87%.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.